Smart tax saving strategies for salaried and business professionals. Tax season is here, and nobody likes paying more than they should. But what if we told you there are legal ways to reduce your tax burden? Whether you're salaried or running a business, we've got you covered with the smartest tax saving strategies for 2025. Stick around and let's make sure you keep more of your hard-earned money. Understanding the basics. First things first, let's break down the tax slabs. If you're salaried, your tax rate depends on your income bracket. Here's a quick overview of the slabs under the new tax regime. Up to 3 lakh rupees, no tax 3 lakh rupees to 6 lakh rupees, 5% 6 lakh rupees to 9 lakh rupees, 10% 9 lakh to 12 lakh, 15% 12 lakh to 15 lakh, 20% above 15 lakh, 30%. But wait, there are ways to bring down your taxable income legally. Let's dive into the smartest moves you can make. All right now, let's take it a step further. Tax-saving tips for salaried individuals. If you're a salaried employee, here's how you can save the most on taxes in 2025. 1. Utilize Section 80C, invest in PPF, ELSS, EPF, or NSC to claim up to 1.5 lakh deduction. 2. House rent allowance, HRA. If you live in a rented house, claim HRA to reduce taxable income. Third, standard deduction of 75,000 rupees. This applies to all salaried employees automatically. 4. NPS contributions, Section 80 CCD 1B, an extra 50,000 rupee deduction for investing in NPS. 5. Medical insurance, Section 80D, get up to 25,000 rupee deduction, 50,000 rupees for senior citizens, on health insurance premiums. 6. Home loan interest, Section 24B, claim interest paid on home loans up to 2 lakh rupees. Let's talk about something most people overlook. Smart tax strategies for business owners and freelancers. For business owners and freelancers, tax savings can be even greater. Here's how to reduce your tax liability in 2025. 1. Use business expenses. Rent, salaries, travel, and even your mobile bills can be deducted as business expenses. 2. Depreciation benefits. Claim depreciation on assets like office equipment, laptops, and vehicles. 3. GST input tax credit. If you're GST registered, claim credits on purchases to lower your tax burden. Now this one might shock you, but it's a game changer. Startup tax benefits, Section 80 IAC. If you run a startup, you can claim tax exemptions for up to 3 years. 5. Presumptive taxation, Section 44 AD and 44 ADA. If you're a small business or freelancer, pay tax only on 6% to 8% of your turnover. But here's the most important part. This is what separates the 1% from the rest. Advanced loopholes and smart moves, which are lesser-known smart moves that can make a huge difference. 1. Form a Hindu undivided family, HUF. If applicable, create an HUF to divide income and save tax. 2. Gifting money to parents and investing. Give money to parents in a lower tax bracket and invest in their name to avoid higher tax rates. 3. Invest in tax-free bonds. Earn interest without paying taxes on bonds issued by the government. 4th, LTA, leave travel allowance. Benefits. Get tax exemptions for travel expenses within India. 5. Set up a private limited company. If your earnings are high, a company structure may offer better tax benefits than individual taxation. The new tax changes for 2025 and what's coming next. With the latest Union Budget 2025, tax rates and benefits are changing. One major update: individuals earning up to 12 lakh rupees now pay zero tax under the new regime. That means a huge tax break for the middle class. But how will this affect tax planning for the next year? We'll cover that in our next video. So now you know exactly how to save the most on taxes in 2025 like the 1%. But here's the thing. The real 1% don't grow alone. They lift others with them. If you know someone who's serious about their future, share this and bring them in. Got tax questions? Drop them in the comments below and stay tuned for our next video on the new tax slabs for 2026.